YouTube gang, what's good? It's another video, and this one I'm going to be talking about prop firms. Now, I think one of the first videos I did talking about, the trading industry and this, that, and the other, I did put a little bit of comments on prop firms, but today's video, I'm actually going to talk about why I think they're good and bad at the same time. And the only reason why I'm doing this is because a lot of guys in my group are on prop firms or funded accounts, this, that, and the other. And I feel like every single TikToker that I come across as well is on a funded account as well. Now, look, this is just my personal opinions. Obviously, I'm allowed to give my opinion before anybody kicks off about it. There are the good points, there are the bad points. You also have to be wary on whether or not these prop firms are legit, because I've seen a lot of stuff in the past that they've gone bust or they've not paid out to people due to changing their rules all of a sudden, and all these other little things. So now I get why people use them. Obviously there is a benefit to using them, but this is where I say the pros and cons. I feel like the cons to me outweigh the pros. Firstly, when you get into trading, for me, it's all about learning the whole aspect and craft of trading in the first place. So you're building up your strategy or a strategy from scratch, which is gonna have a certain set of rules. So once you've built that strategy up, you're gonna be abiding by your rules. Now, pretty much every single prop firm that is out there has their own trading rules. Now, I've had a look at some, I think Nova, Katana. The prop firms that were around when I first started, there was only FTMO and there was something else, but I can't remember the name of them. There was only two prop firms. FTMO's still going, but there was always that phase one, phase two, and then you get your live or whatever, and then it's different payouts or whatever it might be. But there was always these rules. And the reason why I didn't like these, to go for a funded account, was because of these added extra rules. And I felt like that was creating a lot of pressure already on top of something that is, filled with pressure day to day. Trading is filled with stress, pressure, emotions and stuff like that, especially when you're first starting out. Further on down the line, obviously those emotions kind of, you suppress those emotions and you learn to control them, and you're a lot more calm. So when you're a fresh new trader, and this is where I think prop firms have just blown up in the past, I'd say maybe year, 2 years. This is where I see the most amount of prop firm content spread all over social media. So people first coming into this haven't even looked at a single chart in the first place. So they don't know what trading's about, but yet they feel like they are going to be able to stick by a prop firm's set of rules. They don't know about grid trading, they don't know about hedging, they don't know about trading through news, all these different rules. And this is why a lot of people fail. They don't know about risk management, they don't know about what 10% drawdown is and all this sort of stuff, because most prop firms have the same sort of, around about same sort of rules, not trading news, some don't allow scalping, some don't allow grid trading, hedging, all these different things. And so when you're jumping into this as a new person, you have no clue about those things. So that's why initially you are going to fail. You are going to probably fail phase one or phase two. But now there are bots. So there are bots that pass your phase one and phase two for you. So you're already, in my eyes, cheating the system by doing that phase one and phase two for you by a bot, when that phase one and phase two is there specifically for you to learn the rules, to see if you're even worthy of having a 200k or 100k, whatever it might be, funded account. Now, if you can't pass that phase one or phase two by yourself, you shouldn't have a funded account in the first place. You shouldn't even be trading in the first place. So getting a bot to do it for you, you're still met with the same rules when you get the live stage. Now, the live stage, for anybody that thinks that they are, funded with 600k or 500k capital. You're not. You're funded with a demo account. Like, any person that thinks that their live stage is real money, I'm afraid to say it isn't. It is not live money, it is still a demo account. The majority of them, when you put them into MT4 or MT5, when you get the credentials for the live stage, they say up on the top hand corner, demo, right? So you're not, technically funded with $500,000 or £500,000 or whatever it might be. You're just funded with a demo account, okay? But the same rules still apply. But you haven't learnt those rules through the phase 1 and the phase 2. So when it comes to the live stage, you're probably going to fail that because you're going to over risk, or you're going to go into X percentage drawdown, which is going to obviously, mean you failed the challenge. But obviously the prop firm is going to give you a reduced fee, I guess, to go again. And this is how they reel you in. So when you do get your payouts, maybe there's been a few in the group that have had like $3,000 or something payout, blah, blah, blah. That's just somebody else's fees. Those are people paying to get that 200k funded account or 100k funded account, whatever it might be. For me, if you've got £500-600 to go and buy a prop firm challenge or a funded account, I don't understand why you're not using that live capital to learn how to trade, start from the bottom and start working your way up. Actually learning to be consistent. Because £600 and losing that, you're just getting into the swing of learning to see blues and reds on your MT4, learning to see money coming in from an external thing that you're not used to. When I feel like the way it's marketed now, especially for new traders, is trade with as much capital as you can and make as much money as you can, which is fine. But let's be honest, the majority of people that first start out are not going to be consistent, and they are going to be blowing that funded account and going again. So before you know it, you've gone and spent nearly 12, maybe £1,800 on funded accounts that you've just blown. Yeah, okay, you passed the first stage and the second stage with a bot, but when it gets to the live stage, you can't even get a payout because you're in minus, you're in drawdown, you're in this. In my group, a lot of the guys are on funded accounts. I'd say 80% probably of people in the group are on funded accounts. So they are trading my signals on their funded accounts. My signals, I'd say, aren't built for funded accounts. I use relatively big stop losses because I'm more of an intraday swing trader, so I will hold trades for a long period of time. So that means they've got to manage their risk a hell of a lot more. All of them I know for a fact have not even been trading for, I'd say, 2 months. A lot of them that are in there have probably only been trading maybe 3-4 weeks, or maybe a couple of months, give or take. Yes, some of them are being consistent, but I mean, they're only based off of the trades that I give out as well. Plus they're also, taking a few setups by themselves as well, which is cool. But, there's always constant conversation about, are you able to do this? Are you able to do that? Are you able to, put multiple positions in them? All this sort of stuff. And I feel like they are just clogging themselves up with so much excess pressure on whether or not they're doing something correct, abiding by that prop firm's rules, that they're almost taking the fun out of trading. Do you know what I mean? Now, the fun out of trading is having your own set of rules and sticking by those. Realistically, you can set your own rules and stick by them quite easily. Some people, maybe not. But, I break my rules sometimes, but I do it normally for the greater good. Yeah, when it comes to prop firms, obviously the pro is that you get to trade with a lot of capital. Okay, so your gains can be greater than what they could be if you were starting off with 300 quid. I get that. That's the reason why, prop firms bank on the fact that we are now in a generation and industry that people need to be making the most amount of money possible. And the appeal for you having 200k in funded capital is a lot more appealing than someone trading with 300 quid and only being able to leverage, 0.01 and seeing 3 quid come through. Whereas if you've got 200k, you might be seeing 300 quid come through. Now, that's where they get you. That is where they're reeling you in. They know that you are fixated on making the most amount of money possible. But all I promote through my videos and, pretty much to anybody that speaks to me in the group is take the whole money aspect out of it and learn to actually trade. Learn to actually look at the markets and see movement, market structure, price action, whatever it might be, whatever strategy you want to build, focus on that first. Like, the money side of the coin comes on further down the line. I feel like people just want to skip the whole learning part and just get to making 10 bags a month because they see other people do it, or they see it on social media. Obviously some people don't do it, it's just bullshit, they're just pretending. But the guys that actually do it, there's a reason why they're making that type of money. They've gone through the process, they've got to a consistent stage, they've got to being able to make that kind of money based off the fact that they've sat, learn, and can actually look at the market and know when to sell and know when to buy. That's the only pro I see with it, is being able to make more capital than what you could off of your own balance. But there's the cons for me are, misleading. It's misleading you into thinking that you are going to be making that type of money. The fact that I've got a number of people that have gone to get their first payout and they've all of a sudden broken rules. They've gone, oh, well, you did this at this point. Well, why weren't you notified when you did that you'd gone and failed? Do you know what I mean? Why has it gone passed down the fucking, to the payment stage and you've then been hit with it? Do you know what I mean? I think there was even a guy on a podcast who was saying that he was, due to get $75,000 payout from his funded account, and he ended up getting $1,500 because they changed their rules at the last minute. So because he didn't withdraw within the period of time before they changed their rules, he then couldn't withdraw his $75,000. And this is where I'm saying, majority of these prop firms, you need to check to see whether or not they are regulated. If they are not regulated, they can pretty much do whatever the fuck they want. They don't have to pay you out. They can change their rules whenever they want without having to, run it past the FCA or the FCC or whatever it might be. They can do it whenever they like. And you can't do fuck all about it. You could try and take that company to court, but the court will turn around to you and say, sorry, it's not regulated. There's nothing that we can do about it. And then you are effectively screwed. Other cons are definitely the rules. Okay, definitely the rules. That's one of the biggest things. Also, one of the things I try to wrap my head around is they call it grid trading. Now, for me, grid trading only sounds like layering. Now, when it comes to actually trading, sometimes you need to layer. If there is a big period or a big area where you are looking to take a sell or a buy, and a lot of traders do it, it is a way of trading, is they layer in positions or scale in positions. So if you've got a sell area from 2016 to 2020, that is a 40 pip range area where you are looking to potentially take sells. So say you put one in at 2016, price pulls down, pulls back up into 2018. You put another one in, pulls back down, pulls back up into 2020. You put another one in. That there is classed as grid trading. To me, it is layering, and plenty of traders do it because they might be taking their max lot size and splitting it into three. That's how I tell everybody to do it anyway. If I've got 3 take profits, 3 areas I'm looking to actually scale off positions, then you split those positions into 3. So you don't have to manually then close off 50% or 20% or whatever it might be. You've got those positions already scaled in and scaled into the take profits, so they're manually doing it themselves without you having to actually do anything yourself. So scaling in and layering in it's quite a natural thing to do. I looked at some prop firms, breakdown. They want to promote good trading, pinpoint entry trading, which I've said to you guys is just not possible. There is no such thing as a perfect entry. If you do happen to get a perfect entry, okay, like, congratulations, it'll probably be your first and only time. I've done it twice, maybe 3 times in 6 years, where it just so happens to have spiked into a high, tapped to the T and then dropped. That's a perfect entry, but it's never possible, especially when you guys are just starting out. And especially with the spreads that these funded accounts give you. The spreads are never that good, because they realistically want you to fail. Like, this is why funded accounts and prop firms, have these rules, because they want you to fail. Yes, they are teaching you something to a certain extent, but they're evidently wanting you to fail because you are then paying for somebody else's withdrawal. That's why if you go and have a look at the statistics, there's 95% of traders, or I think someone did it the other day, and it was 98% of funded traders lose. There's only a 2% that actually make good, decent money on there, big money, right? And prop firms and funded accounts, they don't mind those 2% because they've got 98% of people paying for those 2%. They're not paying anything. No money is coming out of their back pocket. They are issuing people with demo accounts, and the payments that you are withdrawing is just from the built-up fees that they've taken. Thank you very much from 10, 20, 30, 40,000 people all taking a prop firm challenge who failed. Oh, okay, well, there's Joe Blogs. He's just made a withdrawal for $3,000. There you go. There's $3,000. That's like 1% of the built-up bank that they've got from people buying them. So, look, it's one of them. I had somebody also comment on my video when I first talked about prop firms, is, they really work for me, it works for people that have, small capital. But I don't consider, if you've got no prop firm challenge or no prop firm that I've seen funded account costs 100, 200 quid. Unless they're doing some sort of discount or whatever. I saw Katana, they do like a 25% off or something if you use crypto. But that still works out as $600 for a funded account, for a 200k funded account. $600, that's perfect to start off with. Perfect for you to sit and learn. $600, placing 0.06 lot sizes on per trade. That's perfect equity for you to start getting your head around the whole journey of trading. But instead, you want to take that $600, you want to buy a 200k funded account, and you want to sit there putting 2, 3, 4 lots on. And that for me is just the wrong mindset to be coming in. It's also this I feel like it's a statement now. It's kind of like a dick swinging competition. I'm a £500,000 funded trader. Cool. Knowing how easy it is to pass these phase 1 and phase 2s and get the actual prop firm. You could go and buy one from Nova, buy one from Katana, anywhere that allows these HFT bots, get $1.5 million worth of fucking funded capital and call yourself a mil funded trader. Doesn't mean you're consistent. Doesn't mean you're making big money. Unless you are making 50, 60 bags a month off of these funded accounts jointly, you're realistically you're a demo trader that is just trading big amounts of equity but not actually making big money from it. That whole dick swinging competition of I'm a 500k funded trader and blah blah blah. Okay, cool, amazing. I'm happy for you. It's not like you haven't got 500k of your own equity, playing by your own rules, making 10 bags a month. Because, if you've got 500k equity and you're actually trading, you've been trading for 3, 4, 5 years, and you're consistent, then you are pulling in that 50, 60k. You're not having to split it 50-50 with the prop firm. You're not having to worry about if that prop firm just suddenly disappears off the map and you've now lost your equity and you've lost your, money that you might have built up to withdraw. So there's all these things that, again, you're kind of having to bank on that prop firm being around. And, I don't think they will be. I personally think maybe in a year, 2 years' time, you'll see a lot of these prop firms die out, or something will happen where these prop firms will just stop. They'll stop trading, or they'll stop, functioning. There'll be something that comes out because the government and stuff like that, they're cracking down on these things. The UK, they've just brought in this whole thing about crypto, FX. If you are making side hustle money over £1,000, you've got to be declaring it. Like the US as well, I think there's some stuff going on in the US, hence why that prop firm was closed down or just disappeared off the map. And that's what, if they want to, they could literally just shut down now and there'd be nothing anybody could do about it. Nothing at all. You've paid your fee, they've got it, see you later. So that's why I'm saying you need to be very, very careful with these prop firms. Yes, I know a lot of them are, they've got good reviews and they might have been functioning for a while, but they're like ticking time bombs, for me anyway. Brokers, they're a little bit more legit. Brokers have to jump through hoops, to be established and to be actually able to produce, the circumstances for people to trade, or the platform for people to trade. So brokers are a little bit more safer. These prop firms aren't. And that is my take on them. So yeah, I mean, the biggest one for me is definitely just how it is reeling people in. And especially when people are first starting out, you see all your TikTok gurus or TikTok traders, they're all on funded accounts. That's what all they promote. You've got to remember that if they're promoting a funded account or a prop firm that they work with, they're no real different to, affiliates for actual brokers. They're obviously getting some sort of affiliate deal, some sort of commission for someone maybe taking a funded account through them. So it's no different. But if you're fresh starting into this and you want to get into this, take the money aspect out of your head. Literally just go to YouTube, have a look. Like I said to you, it takes a weekend for you to even just look into something. See if you could even get your head around this before you even start forking out 600 quid for a prop firm challenge. Do you know what I mean? And then if you are getting that prop firm or getting that funded account, take the phase 1 and phase 2 by yourself. Do not get a bot to do it, because it's effectively just cheating. You're cheating your way through probably the most important stages to get to that funded stage. If you pass the phase 1 and phase 2, give yourself a fucking pat on the back, because you've managed to stay consistent, abide by the rules through the phase 1 and then the phase 2, and then get your certificate. Like, you're literally getting given a certificate for a bot doing the job for you. I'd feel a lot more accomplished if I did the phase 1 and phase 2 by myself back in the day, and then got the live account stage, and then traded myself and stayed consistent. So when you're first starting out, guys, take prop firms and funded accounts out of your peripheral vision and just, take 200 quid and try trading out. Try trading out. Try trading with small lot sizes. Try becoming consistent. Then, okay, further down the line, when you know you're consistent, you've got a strategy, you know how to risk manage properly and all this sort of stuff, then get a funded account. Get a funded account to build up your live account. Still trade your live, but use your funded to basically fund the capital into your live. That's all you should be using funded accounts for. It's taking that capital, putting it into a live account, so that you can get away from these funded accounts. You don't have to abide by their rules. You're not having to wonder whether or not they're going to go bust, and you've got your live capital. That is exactly what I would be doing with funded accounts. So look, like I said, pros and cons, take it as my opinion. You don't have to agree. If you guys love funded accounts, then I understand. It's just my honest opinion, being in this for 6 years and knowing how the pressure is on in the markets. So with that being said, guys, hope you enjoyed this video. Drop it a thumbs up, subscribe, watch the rest of my content as well. And like I said, doesn't have to be just my stuff that you watch. There's lots of other good traders out there to watch, ICT, all of their sort of stuff. But yeah, I will see you in the next one. It will probably be the weekly breakdown and forecast on Sunday.